Hi everyone, it's Tyler and Hector with Tampa Bay Exclusive Realty, and we're here with Patrick Storch, our preferred lender with the mortgage firm. We just have a few questions to give you guys a quick market update. Hector, you want to take it away and ask a few questions?
Absolutely. So the Feds actually increased the rate yesterday. So what we want to get or know from Patrick is how that's going to impact future mortgage rates, as well as how that's going to impact payments.
Yeah, so thank you, Hector, Tyler, for coming in today. Appreciate it. Love you guys. Hey, listen, the Feds raised the rates yesterday 0.25%. And this is like the fourth time that they've raised rates this year. The Fed fund rate is at 2.25% now. And the prime is now at 5.25%. So what is this going to do for us, the mortgage industry, and just rates in general? So really where this affects is the like credit cards, HELOCs, adjustable rate mortgages. Those are all going up. Okay, so any payments on those kind of things are going to go up. Now, where it's going to help you is CDs, savings accounts. Those rates are going to go up also, so it's going to help you make a little bit more money in your savings accounts and CDs and things like that. So it doesn't directly today affect our mortgage interest rates, but it follows right behind it. So with the raise in the past year, with all of these raises, we've gone up 1%, but just about 1% since last year at this time. So it is definitely going to affect us, and and then they're going to raise rates again, more than likely by the end of the year as well.
Yeah, and that's one of the things that I recall from working in banking back in the late 90s is interest rates. Back then, the norm was 7%. So if rates continue, as Patrick mentioned, we've got another rate increase that's projected for December, 3 in 2019, 1 in 2020. So chances are that our rates are going to increase similar to those rates, which was the norm back then. So I guess the next question, Patrick, is how does that affect people's purchasing power with the rate increase?
Good question. Yeah, so what's going to happen is with the interest rates going up, our buyers are not going to qualify for as much house anymore. Okay, so a $250,000 house that they qualified for, with rates going up 0.25%, 0.5% or more mortgage rates, they may not qualify. They may qualify for 2.25% or something like that. So any buyers that we have right now, it is very, very important, number one, to lock in a lower interest rate to get their payment lower, but also not to affect how much of a house they can qualify for. So it's very important that if you're interested right now with the rising values of houses too, now is a great time and not to wait too much longer to purchase a house.
Patrick, let me ask you this. Tyler has definitely had some feedback from some of the buyers who indicate they would prefer to rent for a year. In fact, he has someone who is willing to rent for about $7,000 a month. Now, is there an advantage to renting now and waiting till rates increase even higher?
So good question on that, because now we have the new 2018 Tax Act. Okay, so depending on your tax bracket, the deductibility is going to be important to look at also. Where it was 100% better to own a house than rent, with the new 2018 Tax Act, that may be changing a little bit. But do you want to pay somebody else's mortgage of $7,000 in rent, or do you want that to go to your house, wherein 10 or 15 years you gain that equity in the house? And quite frankly, with the rates as low as they are right now, if that potential client waits a year or two down the road, what's going to happen is they've thrown all that money away, quite frankly. Okay, and then when they're ready to buy in 2 to 5 years, rates are going to be at 6 or 7%, so they're going to qualify for a lot less of a house, and they're just throwing money away. Bottom line.
So Patrick, do you remember when rates were normally 7%?
Yeah. Actually, when I started in 94, 95, the rates, I closed a loan at 10%. And that's when I got in the market at the height of the market. So it was difficult back then. So 10%, and then slowly our rates just have come down over the years. The lowest we were at was around 3.4, I think, in 2016. We're in the high 4s right now. And we will, and I promise you, our rates will be in the 5s. If not by the end of the year, next year for sure, rates will be in the 5s again, and the 4s will be goodbye, just like the 3s are. So now is a perfect time. Don't sit on the fence. Don't wait too long to rent. Okay, now's a great time to lock in those lower interest rates, qualify for more of a house, and call these two guys right here. They're great real estate agents, been working with them for many, many years. They know what they're doing. They're dedicated to their clients. So guys,
We really appreciate it, Patrick, and it's Tyler and Hector signing off. We just wanted to give you a quick market update, and hopefully, we'll talk to you guys soon.
Thank you.
thank you.